Namaste, my dear friends. Now I am referring to you CA Intermediate May 2024 question paper taxation section B with regard to goods and services tax. 50 marks question paper answers I am presenting one by one is as follows. The first and foremost, which is comprehensive study type of question has been asked at intermediate level, which I am reading as follows. Evershine Private Limited, a GST registered supplier located in Jaipur, Rajasthan, is engaged in supply of taxable packaging goods and consultancy services. It provides following details of various activities undertaken during the month of September 2023. Details of outward supplies one by one is as follows. Supply of goods of 18 lakhs to Vaidehi Enterprises, a registered person of Udaipur, Rajasthan. Further, received rupees 50,000 from Vaidehi Enterprises towards freight charges as agreed to deliver the goods at Vaidehi Enterprises premises, which was not included in the above value of supply. Second point. Supply of goods worth rupees 35 lakhs to Call Exim, a registered person of Prayagraj, Uttar Pradesh. Further, the amount of rupees 60,000 charged separately, not included in the above, from Call Exim on account of municipal taxes levied in relation to such outward supply. 3. Supply of services to Sunshine Limited, a registered person of Jodhpur, Rajasthan before discount worth rupees 6 lakhs. Further, discount of rupees 30,000 which has been given at the time of supply of services and duly recorded in the invoice. Fourth point, it delivered the goods worth rupees 2 lakhs to G1 Solutions, a registered person located at Bikaner, Rajasthan on the directions of Raghu Enterprises, a registered person of Mumbai, Maharashtra, and tax invoice was issued by Evershine Private Limited to Raghu Enterprise of Mumbai, Maharashtra. Further, details of inward supplies are as follows. 1. Purchase raw material goods worth rupees 20 lakhs from PQR, a GST registered dealer located at Kanpur, Uttar Pradesh. Goods worth rupees 1 lakh out of total purchases were not received during the month. Point number 2. Purchase machinery for manufacturing process worth rupees 2 lakhs from MPQ Private Limited, a registered dealer under GST located in Bangalore, Karnataka. Company has claimed depreciation under the Income Tax Act 1961 on full value of the machine including the GST component. Point number 3. Purchase a truck worth rupees 15 lakhs from GST registered dealer located at Ajmer, Rajasthan for transportation of his goods. GST rate on truck is CGST 14%, HGST 14%, IGST 28%. Further, purchase of car having seating capacity of 17%, costing of 10 lakh rupees excluding the GST from Mihir Automobiles Private Limited, a GST dealer located at Ajmer, Rajasthan for use its directors for official use. GST rate on CGST 14%, HGST 14%, IGST 28% on such vehicle. Point number 5. Purchase goods worth rupees 5 lakhs from DEF Builders Private Limited, a registered person of Jaipur, Rajasthan for construction of an additional floor factory building of Evershine Private Limited. Opening balance of input tax credit as on the date of beginning of the September month 2023, CGST 20,000, SGST 50,000 rupees, IGST 75,000. Rate of GST applicable on both inward and outward supply of goods services, CGST 9%, SGST 9%, IGST 18%, except where otherwise provided. Notes. All the figures mentioned above are exclusive of taxes, subject to the information given above. Conditions necessary for claiming the ITC were complied with. All inward supplies are used for taxable goods only. Briefly and suitable note provide from which is form part of your answer. Calculate the amount of net minimum GST payable in cash by Everest Private Limited for the month of September. 10 marks. This problem has been appeared in the May 2024 examination of CA Inter. Very simple problem, my dear friends. They given here outward supplies, thereafter inward supply. GST on outward supply less ITC on inward supply, the net payment to department. This is what here, very simple. We have to apply the application of the provisions. In the given case, we are computing for Everest Private Limited outward supplies. If you refer here, first point, my dear sir, first point if you refer, supply of goods 18 lakhs to Vaidehi Enterprises, registered person of Udaipur, Rajasthan. Further received rupees 15 rupees towards the delivery charges, where they agreed to provide the product at the doorstep of the buyer. In that case, the value of supply here is value of supply here 18 lakhs plus the delivery charges rupees 50,000, namely 18 lakh 50,000. Now, where they deliver from where? From Rajasthan, they deliver to the Udaipur, Rajasthan. In that case, it is nothing but what type of supply? Intrastate supply, which will attract CGST, SGST 9% each. CGST, SGST 9% each. In that case, here CGST 9%, SGST 9% answer supply. I will show you in the statement format. In a statement which I am going to compute now, there I will show you the CGST. Just if you wanted to have a reference, you can have a reference for outward supply. You can see here 18 lakh 50,000, 9% CGST, 1 lakh 6,500, 18 lakh 50,000 rupees, on which 9% GST, 1 lakh 6,500, which is nothing but the GST payable on value of supply, which is 1 lakh 18 lakh 50,000 rupees value of supply. Now, fine. Like that, we have statement. I will show you. For the time being, analyze the answer by referring the question paper itself. In the question paper itself, we can able to answer by inviting the provisions. Now, further, my friends, point number 2, if you take, what the point number 2 says, supply of goods worth 35 lakhs to call exim registered, and 60,000 is the municipal taxes. All taxes should be addable except GST taxes in the value of supply. Therefore, here value of supply not only 35 lakhs but also 60,000. Then 35 lakh 60,000. This supply of goods, where they supplied? They supplied to Uttar Pradesh from Rajasthan. Sorry. In that case, what is going to apply? IGST will apply at the rate of 18% on 35 lakh 60,000, which also is shown here in the case of see 35 lakh 60,000, on which the 18% of IGST, 18% of IGST is equal to 6 lakhs 40,800. Now please come back further. Point number 3, outward supplies. Point number 3, supply of services to Sunshine Limited, a registered person of Jodhpur, Rajasthan itself, before discount of how much supply? 6 lakhs. Discount they given 30,000 at the time of supply itself. Therefore, this discount is allowed to deduct from the given value. Therefore, 6 lakhs is the value of supply. Correct? Here 6 lakhs is the value of supply. From that allowed discount here 30,000 rupees. Deduct the discount. Balance 5,70,000 is a taxable supply of services, where they provide the intrastate supply. Therefore, CGST 9%, SGST 9%. That has intrastate supply. I have been mentioned here for your kind consideration. Value of supply of services, intrastate supply 5,70,000. How you got 5,70,000? 6 lakhs minus 30,000 of discount, which is allowed as a deduction. Therefore, we deducted the balance amount 5,70,000, on which we charge the 9% of CGST, 9% of SGST, which is 51,300 here for CGST, SGST. Now come back. Further referring here, sir, point number 4. Point number 4 I'm referring here for a kind consideration. It delivered the goods worth rupees 2 lakhs to G1 Solution, a registered person located in Bikaner, Rajasthan, on direction of Raghu Enterprises, a registered person of Mumbai, Maharashtra, and the tax invoice was issued by Evershen Private Limited to Raghu Enterprises, Mumbai, Maharashtra. Here, what happened? Goods are delivering from Jaipur to Jaipur only. However, upon the direction of a third person who is looking in Maharashtra, therefore, the place of supply goes to Maharashtra. Location of supply in particular Rajasthan. Therefore, interstate supply, it attracts the IGST on rupees 2 lakhs. So, IGST on rupees 2 lakhs here on rupees 2 lakhs, I just 18%, 36,000. With this, we got an output supply which is CGST 2 lakh 17,800, SGST 2 lakh 17,800, and IGST payable on outward supply 6 lakh 76,800, which is before adjustment of input tax credit. Now, inward supplies. Let us see inward supply. Very good problem it is, my dear friends. Very easy to answer, though the problem may be lengthy, but 10 marks easy to score if you have patience to read and apply the provision. Simple. Now, here only you have to be alert. In the given case, be alert. Inward supplies. When we talk about inward supplies, here they said purchase raw material goods worth rupees 20 lakhs from PQR Limited, a GS registered dealer located at Kanpur, Uttar Pradesh. Goods worth rupees 1 lakh out of the total purchase were not received during the month. If the goods not received, input tax credit to that extent not allowed. Therefore, what is the value here? They got 20 lakhs worth of the goods. Out of 20 lakhs worth of the goods, 1 lakh of the goods not received. Therefore, to the extent of 1 lakh worth of the goods, ITC not allowed. Therefore, balance 19 lakhs. On 19 lakhs, the interested inward supply, interested, they have purchased from Uttar Pradesh. Therefore, interested purchases, 18% of IGST on 19 lakhs qualify for input tax credit. If you see here on 19 lakhs, 18% GST, 3 lakh 42,000 is the IGST, is qualify for input tax credit. Further, my dear friends, point number 2, inward supplies. Purchase the machinery for manufacturing process worth rupees 2 lakhs from MPQ Private Limited, a GST registered dealer located Bangalore, Karnataka. Company has claimed depreciation under the Income Tax Act 1961 on full value of the machine, including the GST component. In that case, what is going to happen? Input tax credit on such capital goods not allowed. It is a blocked credit. Therefore, ITC not allowed in the given case. No ITC because it's a blocked credit. Further, point number 3, purchase truck worth rupees 15 lakhs from the GST registered dealer located at Ajmer, Rajasthan for transportation of its goods. GST rate on trucks is CGST 14%, SGST 14%, IGST 20%. Intrastate supply of vehicle transporting the goods well allowed to claim input tax credit. In that case, on 15 lakhs, intrastate supply CGST 14% and 14% of SGST is applicable, qualify for input tax credit, which I am presenting here. See in the given case. On 15 lakhs, 14% CGST, 2 lakh 10,000, SGST, 2 lakh 10,000 as inward supply on which input tax credit is allowed. Further, my dear friends, referring here, point number 4, inward supply. Purchased car having seating capacity of 7 persons costing rupees 10 lakhs exclusive of GST from Mihir Automobiles Private Limited, a GST registered dealer located at Ajmer, Rajasthan, for use of its directors for official purpose. GST rate on car CGST 14%, SGST 14%, and IGST 28%. My dear friends, how to understand this? Very simple, my dear. If the motor vehicle which is meant for transportation of passengers where the seating capacity not exceeded 13 persons, which include driver, which is a blocked credit. Here is a clearly blocked credit. Therefore, ITC not allowed here also. No ITC. Further, point number 5 I am referring. Purchase the goods worth rupees 5 lakh from DEF Builders Private Limited, registered person of Jaipur, Rajasthan, for construction of an additional floor of a factory building. That means what? Inward supply used for the capital purpose, which is immovable nature. That means the works contract supply is blocked credit for the end user because it has been used for construction of a furthermore factory building, which is a capitalized nature of expenditure. GST paid on such factory building material, ITC not allowed. Works contract services in general, ITC not allowed unless the specific cases. Specific exceptions separate. Here there is no such a specific exceptions, no specific separate exceptions. As a result, this is also be blocked credit. Therefore, no ITC. So as a whole, we have the ITC input tax credit on point number 1 as well as point number 3 only. We have the input tax credit and opening balance. Now here I shown to you, see, if you refer here, my dear friends, first point ITC allowed, second point not there, third point not there, fourth point not there, fifth point also. Here third point ITC is there. First point ITC inward supply, second point no ITC, third point yes there is ITC allowed, then fourth point no ITC, fifth point also no ITC because of block credit. So we got input tax credit without opening balance 2,10,000 CGST, 2,10,000 SGST and IGST 3,42,000. Then we have to take opening balance also to add in the given case. Now I am going to prepare statement showing net minimum GST payable by Evershine Private Limited. In that case, for the given month of September as follows. So opening the output tax of CGST, SGST as well as IGST I mentioned here, and opening balance of ITC, first IGST directed, IGST credit first adjusted with against IGST, still we have to pay IGST. In that case, we have the CGST opening balance, SGST opening balance. After that, CGST credit, SGST credit. Still we have CGST credit, SGST credit. While paying the IGST, we have to consider CGST excess credit. First CGST excess credit should be set off. Still insufficient to pay. Therefore, SGST excess credit we have taken for payment of IGST. Therefore, the net liability to pay by electronic cash ledger only the IGST 2,05,400. It is what the net minimum amount payable by cash, electronic cash ledger. With this, question number 1 is completed, my dear friends. Further, my dear sir, question number 5B, reading as follows. Mr. Ravindra, a registered person in Bhopal, Madhya Pradesh, has provided the following information regarding outward transactions made during the month of January 2024. He has, point number 1, he was appointed by recognized sports body as a chief selector of hockey team and received 5 lakh rupees as a remuneration. Point number 2, supply of services of pure labor contract was provided for construction of independent residential unit for 1,80,000. Next point, he rented out his warehouse for warehousing of sugar cane and received rental income of 75,000. Further, point number 4, provided services to Municipal Corporation of Bhopal for slum improvement and develop upgradation for rupees 6,50,000. Point number 5, he has charged consideration of rupees 1,25,000 rupees against Western music dance performed in an event. You are required to compute the taxable value of supply on which GST to be paid by Mr. Ravindra for the month of January 2024. All the amounts stated above are exclusive of the GST. Wherever applicable, suitable notes should be form part of your answer. What a simple problem. It is entire, this entire question is from exemptions chapter. Very simple to answer, my dear sir. First point, if you see, he was appointed as a by a recognized sports body as a chief selector. Who are exempted? Individual as a player, referee, umpire, or the coach or team manager. If they provide the services to recognized sports body, only exempted. He is a chief selector. Selector not there. What are they? 5, individual as a player. Second one, the coach, umpire, referee, finally team manager. The 5 people only. If they provide to recognized sports body, exempted. Selector providing services to recognized sports body is absolutely taxable. This 5 lakh rupees is taxable supply. Further, point number two, pure labor contract was provided for construction of an independent residential unit. A single unit, pure labor, absolutely exempted from the payment of GST. Further, point number three, he rented out his warehouse for warehousing of sugar cane. Warehousing of sugar cane. Sugar cane is nothing but agricultural produce. Warehousing of an agricultural produce is absolutely exempted. Further, point number four, provided services to Municipal Corporation of Bhopal for slum improvement and upgradation. Of course, it is falls under the Article 243W of the Constitution of India, where the pure labor service provided to government or local authority then qualify from exemption. Further, first last point number five, he has charged consideration 1,25,000 rupees against Western music dance performed in an event. Classical form of art, dance, music only exempted. Western dance performance is not exempted. Therefore, well taxable. Taxable. So, what are the taxable? Point number one taxable. Point number two taxable. Therefore, here 5 lakh rupees taxable. Thereafter, 1,25,000 tax. Totally 6,25,000 is a taxable supply in the given case in the hands of Ravindra. So the answer is given here. 6 lakhs 25 rupees is taxable for your kind consideration. Thereafter, referring here, further referring my defense. Question number 6A. As per the CGST Act, Vishnu Limited was not mandatorily required to get registered. However, they opted for voluntary registration and applied for registration on 12th February 2024. A registration certification has been granted by the department on 24th February 2024. Vishnu Limited is not engaged in making the interstate outward taxable supplies. The CGST HGST liability for the month of February 2024 is rupees 31,000 each. Vishnu Limited provides the following information of inputs held in stock on 23rd February 2024. Particulars amount. Capital goods procured on 5th February 2024, rate of CGST 6% each, being interest rate supply, which is 2 lakhs. Inputs contained in finished goods stock held were procured on 13th February 2023, rate of IGST 18%, being interest rate supply 3 lakh rupees. Point number 3. Value of input received on 10th October 2023 contained in the semi-finished goods held in stock, rate of CGST SGST 6% each, being interest rate supply 2,50,000. Point number 4. Inputs procured on 1st February 2024 lying in stock of semi-finished goods, rate of CGST SGST 7.5% each, being interest rate supply, total value 1,50,000. Point number 5. Inputs procured on 8th February 2024 lying in the stock of finished goods, rate of IGST 80%, being interstate supply, which is amount rupees 60,000. You are required to determine the GST eligible ITC available and the amount of net minimum GST to be paid by in cash by Vishnu Limited for the month of February 2024. What a great answer it is. It is a little bit advanced concept, but they are asking the examination at CA intermediate level. So in the given case, it belongs to section 18 of the CGST Act, where the special circumstances to avail the input tax credit. If a person voluntarily obtained the registration certificate, the date on which he obtained the certification of registration is the effective date of registration. Prior to that date, preceding the date of effective date of registration, the goods lying in the organization as a finished goods, work in progress, or raw material only qualify for input tax credit. That too, that inputs should not be older than 1 year from the date of purchase. In the given case, my dear friends, capital goods credit not allowed for the particular person who obtained the registration voluntarily. In that case, first case, capital goods, ITC, here, I will say that no ITC. ITC not allowed. ITC not allowed. Further, my difference, point number 2. Inputs contain the finished goods stock held were procured 13th February 2024. So 13th February 2023, if they purchase, 1 year, it ends when? 1 year ends on by 12th February 2024. But my effective date of registration is 24th of February. That means as on 23rd February 2024, that should not be more than 1 year. It is a more than 1 year. As a result, here also in the given case, also no ITC. ITC not allowed. Further, point number 3. Value of inputs received on 10th October 2023 contained in the semi-finished goods held in stock. Yes, 2,50,000 rupees. CGST, SGST, interest supply is qualified for ITC. Here, ITC allowed. ITC allowed in the given case. 2,50,000 rupees ITC allowed. See, I mentioned here ITC allowed on 2,50,000, 6%, 15,000 CGST, 15%, 15,000 SGST is allowed. Next point, my dear friends. Inputs received on 1st February 2024 lying in the stock of semi-finished goods. Okay, just now we covered. No, point number 4 is completed. Point number 3 completed. Point number 4 yet to be complete. Inputs procured. Point number 4 I am referring. Inputs procured on 1st February 2024 lying in the stock of semi-finished goods 1,50,000 rupees. ITC allowed? Well allowed. Inputs procured on 1st February 2024 lying in the stock as semi-finished goods. ITC allowed. So here also ITC allowed on 1,50,000. What is this supply? Interest rate supply. So ITC allowed 7.5% CGST on 1,50,000. 11,250 CGST, 11,250 is the SGST ITC allowed. Now you can argue with me, sir, where is the 7.5% CGST SGST each? Is there in the practical manner? Not there. But the examiner, if given in the question, we have no right to question the question paper. As a result, you please consider 7.5% CGST, 7.5% SGST to qualify for ITC. Further, my dear friends, last point, point number 5. Inputs procured on 8th February lying in the stock of as a finished goods. IGST, interstate inward supply, which is how much? Almost here, how much is given? Rupees 60,000. Therefore, this 60,000 rupees IT on which what rate? 18% into 18%. ITC allowed on 60,000, 18%, 10,800 ITC allowed. So ITC total allowed, here what? IGST ITC is 10,800, CGST, SGST 26,250, 26,250 is the credit allowed towards CGST, SGST. Now they given in the problem 31,000 CGST, 31,000 SGST, their output tax liability. The first you have to use input tax credit 10,800. 10,800, what I have did here is equally adjusted. Therefore, I got 5,400 CGST, 5,400 SGST, adjustment of IGST taking place. Further, so IGST fully completed. Then I am going to go with the CGST, SGST credit for the respective payment. So while paying the CGST, I have used the input tax credit. While paying the SGST, I use the SGST credit. Then in that case, excess of ITC is 650 CGST, SGST 650 is available. So net payable by electronic cash ledger in the given problem is nil. Further, my dear friends, referring to you, point number 6B. Point number 6B I am referring here for a kind consideration. Examine the following independent cases and determine the place of supply. 1. Mr. Joy, an unregistered person of Kolkata, West Bengal, sends a courier through Kolkata, West Bengal based Mohan Courier Agency to his sister in Mumbai, Maharashtra. Point number 2. Mr. Nitin, an unregistered person, resides at Rewa, Madhya Pradesh, books two-way air journey ticket from Prayagraj, Uttar Pradesh to Jaipur, Rajasthan on 6th September and back. He leaves Prayagraj on 11th September in the morning flight and land in the Jaipur on the same day. He leaves Jaipur on 15th September in a late night flight and lands in Prayagraj the next day. Point number 3. Rim Jim Private Limited, located at Lucknow, Uttar Pradesh, purchased a manufacturing machine from the Manav Steel Industries Limited, located at Jaipur, Rajasthan, for being installed in its factory located at Haridwar, Uttarakhand. They're asking to find out the place of supply. In the given problem, they're asking to find out the place of supply. Very simple. In the first case, goods supplied, transportation of goods, services, including courier. Place of supply here is in case where if the uh, recipient is a registered person, place of the registered person. If the recipient is an unregistered person, where the goods are handed over to the transporter for its transportation is the place of supply. In the given case, Joy is an unregistered person, so he hand over the goods Kolkata, West Bengal to Mohan Courier for transportation. Therefore, in the given case, place of supply is Kolkata, West Bengal. Further, point number 2. Here, Nitin, an unregistered person, resides in Rewa, Madhya Pradesh, books two-way travel. That means transportation of passengers by air. In that case, my dear friends, in the given case, if the recipient is a registered person, location of the recipient. If the recipient is an unregistered person, from where the recipient is embarks is the place of supply. He embarks in the first leg from Rajasthan. So place from where he first leg Prayagraj, Uttar Pradesh. So first leg of leaving is Uttar Pradesh. It is not a continuous supply of service because there is a stopover in particular Jaipur. Therefore, embarks from Uttar Pradesh, disembark Rajasthan. So the first leg embarks Rajasthan, the Uttar Pradesh. Place of supply is equal to Uttar Pradesh because recipient is unregistered person. Thereafter, in the second leg, when he is returning back to the Uttar Pradesh from Jaipur, therefore he embarks from Jaipur. In the second case, place of supply is Jaipur, namely Rajasthan. So that there are two-way supplies. Further, in the point number 3, Rimjim Private Limited, located in Lucknow, Uttar Pradesh, purchased a manufacturing machinery from Mano Steel, located in Jaipur, Rajasthan, for being installed in its factory located in Haridwar, Uttarakhand. That means to say that where the installation of the machinery taken place is a place of supply. If so, Haridwar, Uttarakhand. In the given case, place of supply Haridwar, Uttarakhand. Further, my dear friends, next question I'm reading 7A. GSTR 3B for the month of January 2024 has been filed by Mrs. Avisha Limited, a registered person with in the due date prescribed by the CGST Act, which is on February 20th, 2024. It came to the notice of the company that tax due for the month of January 2024 has been paid short of by 16,000. The shortfall of rupees 16,000 has been paid through cash ledger and credit ledger at the time of filing the GSTR 3B for the month of February 2024 on 20th March 2024 in the following manner. Shortfall cash ledger 12,000, credit ledger 4,000. Assume that electronic cash ledger and credit ledger carry sufficient balance for the above short payment. Very good. In the case where they filed the return correctly but short payment of 16,000, which will accrue the interest at the rate of 18% per annum from the due date till the date of payment. What is the due date? 20th of February. But when they paid 20th of March. So in the case 21st of February to 20th of March, number of days is a leap year, they said. If it is a leap year, what is the leap year? Number of days in the month of February? 29. Leap year? 366. They want to consider that. They said in the given problem, assume that electronic cash has sufficient balance. You are required to calculate the amount of interest payable in any, if any, under section 50 of the CGST and rule number 88B of the CGST rules. Further, they said, give the effect if GSTR 3B for the month of January 2024 has been filed belatedly on 20th March 2024 and all the conditions remaining same. In that case, calculation should be around round off nearest to rupee. As 2024 is a leap year, give the effect same. That means February 29 days. They what they want to consider. In that given case, from 21st February 2024 to 20th May 20th March 2024. Repeating again, number of days delay taking place in the first case where the short payment of the GST 16,000, which will attract the 18% interest. So 16,000 at the rate of 18% interest. Number of days. Due date is to pay 20th February 2024, but they paid on 20th March 2024. If so, from 21st of February 2024 to 20th March 2024, how many days? February, almost all, how many days? They given here. I also mentioned here, in the month of February, 9 days. Because 21st of February to 29th February, 9 days. 20th of March, 20 days in the month of March. Therefore, 39 days. 20 plus 9, 20 plus 9, 29 days. Therefore, in the given case, for 29 days, divided by 366. 366. The amount of interest comes here, no? How much? 16,000, 18%, 29 by 366. In that case, interest is 228 rupees. Sir, input tax credit deduction here not there because you are short paid 16,000, you have to pay with the interest, which is 18%. In the second case is considered, if the GST or 3B for the month of January 2024 had been filed belatedly on 20th March 2024, then interest calculation is as follows, my dear friends. In the given case, interest will be calculated on the net amount paid by electronic cash ledger. In that case, 16,000 is the total short paid of GST. From that, deduct input tax credit rupees 4,000. Balance 12,000. That 12,000 rupees will attract the interest in the given case, my dear sir, at the rate of 18% on 12,000 rupees, 18% interest per annum, which is for 29 days divided by 366 because of leap year, which comes out 171 rupees is the interest to be paid in the given case, which is I computed here for your kind consideration is as follows. The computation here I have presented for your kind consideration. Further referring 7b, who is liable to deduct the TCS tax collected at source under section 52 of the CGST Act, briefly explain the provisions relating to registration, filing of return and deposit of the TCS to government as per the provisions of the section 52 of the CGST Act and the rule 12 of the CGST rules 2017. How to understand this? E-commerce operator who is liable to collect TCS under section 52 except supplies covered under section 9 section 5 of the CGST Act. You are aware of that? Section 9 section 5 of the CGST Act, where there is radio taxi services like no any other vehicle providing services through e-commerce operator. Thereafter, we understood the short-term accommodation, housekeeping, supplier of services who supplied their services through e-commerce operator. Those suppliers are uninsured persons. Then the e-commerce operator only liable to pay GST fully. Thereafter, cloud kitchen services supplied through e-commerce operator. E-commerce operator only liable to pay full amount of GST. In such case, question of the TCS does not arise. In that case, section 9.5 covered cases, TCS not applicable. Other than section 9.5 of the CGST Act, TCS is applicable. Who liable to pay TCS? E-commerce operator liable to pay TCS. Further, their registration under GST law under section 24 is mandatory, compulsory to pay the GST, to pay the TCS amount. In addition to the GST registration, e-commerce operator should have to have separate registration as TCS depositor. Further, my dear friends, the payment of TCS on monthly basis by e-commerce operator by filing the GSTR 8 return on or before 10th of the following month and pay the tax TCS by the time of 10th of the following month while filing the GSTR 8 return, which is applicable to TCS payer. We understood this, all the points. And from 1st October 23, there is an amendment also taken place. A time limit of 3 years is provided for furnishing the statement in the GSTR 8 by an electronic commerce operator from the due date of furnishing of the same. If you're not able to submit the GSTR 8, that can be submitted over a period of 3 years from the due date of furnishing the same. Government is empowered to relax the particular 3 years time period furthermore if it is warranted at the request of the e-commerce operator. If the government is feel comfortable, okay, GSTR 8 you're not able to submit by 10th of the following month, you can submit at any time subsequently, even beyond 3 years also. Government may permit upon the recommend of GST Council, government may provide. So generally, e-commerce operator liable to pay the TCS by 10th of the following month by filing the GSTR 8. That can be filed over a period of 3 years also from the due date of filing the GSTR 8. This is what I said here. Since a time limit of 3 years is provided for furnishing the statement in the form GSTR 8 by e-commerce operator from the due date of furnishing the same. So these are the points one can able to answer for the given theoretical question, which is a practical question, my dear friends. Practical theory. Further, question number 8A. Describe the conditions to be satisfied for availing deduction of post-supply discount from the value of supply as per the provision of section 15(3) of the CGST Act. Very good, excellent, practical point. I supply the goods, I supply the services, after raising the invoice, I am providing discount. Such a discount is a post-supply discount. If so, allowed as a deduction from the supply, value of supply. Here the point is, if you provided that particular discount after supply taken place, post supply, allowed as a deduction only when at the time of supply or before supply there must be mentioning of such providing discount in the invoice should be there. That means when I am supplying the goods or services, I mention the invoice stating that I will provide the cash discount to you if you are going to pay within 10 days, within 30 days from the date of invoice. I will give you so much of discount. Such a mentioning of discount in the invoice at the time of supply should be take place. Though the discount may be provided post sale, post supply of goods or services, no problem. But it indication should be there at the time of supply. If neither indicated in invoice nor provided before supply, subsequently at a later date the discount is offered only to realize the early payment, such a discount not allowed as a deduction. So I given a simple slide to you by saying that discount covered under section 15 subsection 3, if when it is covered means buy more save more offers allowed as a deduction discount, or periodic year ending discount as the case may be, which is there in the agreement, which is there in the invoice, though may be given after supply taking place, post supply discount given, but it indication already there in the contract or in the invoice, then allowed a deduction. Suppose no contract specify the discount nor mentioned in the invoice to be provided in future, nothing has been mentioned, in that case subsequently after supply, post sale, post supply taken place, if the seller offers the discount, such a discount is not covered under section 15 section 3, not allowed as a deduction. Further, my dear friends, in the point number 8A only alternative, or you can answer this question also. Examine the existence of consideration for donation received by charitable institutions from individual donors without quid pro quo, an important feature for as definition or defined under section 2 subsection 31 of the CGST Act 2017. They are asking here, consideration is essential for supply. Now donation is a consideration. We have discussed a number of times in the class. Donation is with reciprocity, with quid pro quo, then is equal to consideration, which will attract GST. No sir, donation is a just out of 11 definition is given without any reciprocity, without any quid pro quo. In that case, that donation is only a payment, not a consideration. As a result, as long as there is no consideration, so long there is no GST applicable unless it is going to be covered under the Schedule 1. We understood this point already. So that point has been explained here is elaborately by saying that simply donation is given without expecting anything in return. In that case, it is not a consideration, therefore not taxable. If the donation is given with expectation in return, which is with reciprocity, with quid pro quo, in that case the donation is equal to consideration, then that will attract GST. Further, my dear friends, now referring to you question number 8, point number B. Mohan Enterprises is a registered person having the principal place of business in Gandhinagar, Gujarat. They received the services of advocate Samir, a registered person from Ahmedabad, Gujarat. Shekhar, an unregistered person, provided services of labor to Mohan Enterprise. Explain the provisions relating to issue of invoice by recipient Mohan Enterprise if he is liable to pay tax under the reverse charge under section 9.3 or 9.4 of the CGST Act. In the given case, my dear friends, the advocate services to a registered person, namely business entity. In that case, in the given case, it falls under section 9 subsection 3, which is RCM. So, being a registered person liable to pay GST in the given case, that means Mohan Enterprises should issue a invoice being a recipient liable to pay GST. Coming to the Shekhar, who is provided labor services to Mohan Enterprise. Labor services provided by unregistered person to a registered person covered under section 9 subsection 4 only when the recipient is a provider of construction supply of services. In the given case, if the Mohan Enterprise being a recipient providing construction supply of services, that time only 9.4 is going to be applied. Section 9, section 4 apply with some conditions. Otherwise, section 9, section 4 not applicable to any other supply of services. If I am a practicing cost accountant, I am a practicing chartered accountant, I am a practicing chartered engineer, or I am providing interior decorating services, I am a seller of the goods, seller of laptops, seller of the furniture. In that cases, that registered person received services from unregistered person not attract the GST. Section 9.4 not applicable, even section 9.3 also not applicable. So in the given case, I have mentioned by saying that very simple manner, advocate services supplied by Samir to Mohan Enterprise is taxable supply under reverse charge covered under section 9 subsection 3. On the other hand, if Shekhar being an unregistered person provide these services, labor services to Mohan Enterprises, in that case presently section 9.4 is not applicable for the given supply. 9.4 is applied only when the recipient being a construction contractor received these services from unregistered person, that time with condition satisfied, that time only that is reverse charge. Otherwise, if the recipient is not a construction supply of services, supplier is provide labor services, being unregistered person not attract the reverse charge at all. As simple as this. With this, I can say that question paper May 2024 CA Inter Taxation Section B Goods and Services Tax fully covered. Thank you, my dear friends.